This video is sponsored by TipRanks. Hey guys, welcome back to another portfolio update video. Again, here we're going to be using the TipRanks platform to go over my portfolio and show you what changes I've done in the month of September and what changes I plan to do moving forward in this portfolio as well. Now, I only made a few changes in September since the market didn't really present too many opportunities for us here to average more into our stocks. However, so far in October, we've had some pretty good opportunities, and I did make some moves in October as well, but I'll be covering that in next month's update. So in this video, we're strictly going to be covering the moves we made from the last update video, and that pretty much includes the month of September 2019. So as it stands, my portfolio today is actually down quite a bit. It's down around 2.6% overall, around 4% so far for the month. However, the daily return is up slightly, but it's more or less insignificant. My total holdings now sits in the low $27,000 range, down significantly from the last update, which was around $27,900. So we are down, which is reflected in the monthly gain loss and the total gain loss as well. So what I want to bring your attention to now is the My Returns versus Benchmark section. And this is useful because it gives you an idea of how you're doing versus the S&P 500. So you can see the top bar here is my portfolio, underneath that's the S&P 500. And pretty much since inception, except for July, because we kind of started towards the end of July, so it's not really a full month of data. However, in August, September, and so far in October, we are outperforming the S&P 500. Now, this is a very short-term time period. I'll be curious to see how the next few months fill out as well. But so far, so good. We are building a strong portfolio, and it is actually holding up better than the market is so far. Now, what I want to jump to is my holdings, which is, of course, what you guys are waiting for here. And the first thing you'll notice is that these are all my holdings. There aren't any new holdings added from last month. However, there were a few positions that I added to. So the first thing I did was I actually bought more shares of Altria, ticker symbol MO. So we're currently sitting at a total count of 130 shares with a purchase price of around $46.30. So we are down around 5.3% on this position because the stock has dropped since. However, I do believe this is a company that will recover significantly in the next few years. And with the current dividend yield of around near 8%, this is a bargain at these current prices. I wouldn't be surprised to see me add even more to this position in the upcoming months as well if we stay at the low $40 range. The next move I made actually was in 3M Company. So here we have now 27 shares in total. We added 10 more shares here. So purchase price actually went up a little bit because I averaged up on this position. Now we're sitting at around $160.26 cost basis. And this is still down because the stock is currently today at around $150 or so, $151. But again, this is very short-term thinking. This is not something that I'm very concerned about. I think that 3M will actually be a much larger company moving forward. And we may be seeing some signs of weakness right now because of the global stuff that's going on, global weakness. 3M is one of those companies that suffers from that. So I'm using this as an opportunity to really take advantage of this and just keep buying into this stock. Now, because of these two purchases, my cash position actually did drop as well. So we're sitting at around $4,700 in cash now, which I do plan to deploy in the upcoming weeks. And like I said before, I do want to have ideally all of this money invested in the stock market, in different stocks by the end of the year. Apart from that, we can see that AbbVie is actually doing pretty well for us. We're up around 4.3%. Boeing is up around 5% or so. Lowe's is up at around 9%. FedEx is down quite significantly. We're actually going to jump back to this and discuss FedEx for a minute here. But I'll just move on to the other picks. Texas Roadhouse is down around 2.8%. Caterpillar, we're pretty much break even on this. Pets, this one's actually a very, very speculative play. The balance sheet is good, but the reason I really have this stock is for their dividend growth. And I think that it could actually be a good acquisition target for a company like Amazon. Either way, this company is up around 8% so far and yielding us a pretty high dividend as well. So I'm happy with this. And then last we have Pfizer here with around a 2.5% yield so far with a good dividend as well. So FedEx. Okay, let's talk about FedEx here for a second. This is a company that I added because I did feel that the market was underpricing it. However, after doing a bit more research, I am not entirely sure if this is a company that should be valued the way it is right now. Meaning that I actually do think that FedEx could drop in value moving forward. So let's look at my position here in FedEx. First of all, I have 9 shares. Around $1,200 or so in this company, which accounts for around 4.5% of my overall portfolio. Since I've added an average into this stock, I'm actually down around 13.5% of my position, which as you can see is the worst performing stock in my portfolio. Now I want to jump over here to this tab here just to show you a metric that I was looking at recently which had me a bit worried about FedEx. So if we scroll all the way to the bottom, there's something called free cash flow. And free cash flow is essentially the amount of money that a company has after all of its expenses are paid and taxes and all that stuff. This is the actual money they can use to go reinvest in the business, grow the business, pay out dividends, all that kind of stuff. So FedEx in the last quarter actually lost close to $1 billion, $854 million. And this had me a bit concerned because even if I look at the previous quarters, yeah, okay, we gained around 500 million there. But then the 2 quarters before that was around a $21 and $23 million free cash flow, which isn't that impressive. Now, if I jump quickly here to the annual financials, again, we can see free cash flow so far for the year is positive, but it is worrisome because if you look at the last 2 years, we did lose quite a bit of money. A few years before that, we made money, but right now we're sitting at kind of like a break-even point here in FedEx. And it kind of worries me because this is a company that does pay out a dividend, it does grow their dividend. So if this free cash flow does drop significantly, that dividend could potentially be at risk. Now, jumping back to portfolio, if that does happen, if FedEx does decide to cut their dividends when they face tougher times in the coming months or years, I will most likely cut out this position from my portfolio. I don't want to hold stocks that don't pay out a dividend in this portfolio specifically. This is a dividend growth portfolio for my retirement account, and I want to stick to that strategy for this particular portfolio. So we'll really have to wait and see how FedEx plays out and if this will actually remain in the portfolio. But as it stands right now, this is kind of where my portfolio sits, $2,700 or so. We are down from last month, but I do suspect in the next few months we will recover and some of these positions will actually start to come back more into favor, and if that does happen, we'll see a lot more green in the portfolio. But as of right now, it's a long-term portfolio, not really concerned. So let's just jump over portfolio calendar quickly here. You can see that AbbVie is going to be paying out a dividend, Lowe's is going to be paying out a dividend soon. And then after that, we have a whole bunch of earnings coming up. So 3M, Boeing, Caterpillar, Pets, Pfizer, Altria, AbbVie, Texas Roadhouse, and Lowe's. Pretty much every holding that I have here will be reporting in the next month, month and a half or so. So it'll be exciting to see if these positions drop a bit more. And if that does happen, I will more likely than not deploy the rest of my cash. Now, speaking of cash, I actually do have a bit more money coming into this account. From my calculations, probably another $2,000 to $3,000 or so that'll be coming in. So the portfolio value should be around $30,000 in the next update video, if not the update video after that. And I can tell you right now, I do want to add a few more things to my portfolio. I do want to add more AbbVie, I do want to add more 3M, and maybe even a bit more Altria. So those things will actually be covered in the next portfolio update. Now, the last thing we'll look at here is the portfolio analysis, just to give you an idea of where we stand. So you can see my portfolio risk profile is still below average, 0.92, meaning it isn't as volatile as the overall market. You can see in terms of diversity, we're pretty well diversified. We have consumer goods, services, industrial goods, healthcare. But something I do want to add to this portfolio sooner rather than later is more tech. Looking specifically at a company that we all know, Apple. I do want to add some Apple into this portfolio because I do think it's a great long-term hold. But I am waiting for a better opportunity in that stock because I do think that now it's close to all-time highs. Don't really see as much value moving forward. On the right-hand side here, you can see my overall dividend yield in the portfolio is around 3.78%. And the portfolio right now yields around $850, with the biggest dividends coming from Altria, 8%, Pets with 5.8, and AbbVie with 5.4. So as these companies continue raising their dividends, I suspect this amount will go up quite substantially, this yield will go up quite substantially, and the overall worth of my portfolio will actually continue growing substantially as well. The last thing I really want to show you guys here is I like to look at the PE of my portfolio every so often. This month, we're looking at around a 28.45 PE. So we did increase slightly, I believe, but we're still well below the TipRanks average portfolio. So I'm not too concerned here. And I do believe on a forward basis, a lot of these companies do have a much, much lower PE. So I do think that we'll sit probably around the low 20s or so in the next year or so. Now, just for fun, if you guys want to stick around here, I want to actually show you this feature in TipRanks called the Crowd Insights. And you can actually compare your portfolio to, say, the TipRanks average portfolio. If you set up your portfolio in here, you can see kind of the most volatile stocks in your portfolio, the most volatile stocks the average investor has in their portfolio from TipRanks, the kind of breakdown of your portfolio compared to the average investor. So you can see tech is actually a very heavy holding for most people. And you can kind of go through here just to get some ideas of other companies maybe that you'd want to invest in moving forward. You know, there's like Cisco, maybe you want to look into Micron, healthcare, you can look at Johnson & Johnson, which is something that I'm considering. There's a lot of different companies in here that, you know, are strong blue chip companies that I would personally consider adding to my portfolio. And I like to look at this every once in a while to see what other people are also interested in, to see if I need to do more research in those, if there's something that I'm missing, or if they're presenting a good opportunity right now. But anyways, guys, that was a portfolio update here for October 2019. Hope you enjoyed this. Again, if you're interested in setting up your own TipRanks portfolio, check out the link in the description down below. Use my coupon code as well, Positive2019, to save 10% on a subscription plan if you're planning to sign up for that. Or you can just go try the service out for free and see if it is something that you find value in. Either way, thank you so much for watching. Let me know in the comment section down below what you think of my portfolio, if there's any stocks that I should consider adding or removing. I'd love to hear from you guys, and I love having discussions on individual stocks as well. So comment down below so we can have a great discussion going down there. Either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.